So a little forewarning, I may be making some forward-looking statements today. So a quick snapshot of the company. We are a base and precious metals explorer focused exclusively in North America. Our principal asset is the Palmer project. It's a copper, zinc, silver, gold deposit located in Alaska. That's what I'll be talking about today. As a group, we pride ourselves on our technical strength. We focus on deposit types and jurisdictions. We have a lot of familiarity and expertise. And we've also got a good track record of securing good deals with quality partners, and that's allowed us to really thrive and advance our assets in an otherwise pretty stagnant market. Those deals have also allowed us to avoid the dilution that many are subject to with financings, option payments and management fees. Over the last couple of years, we've been able to raise about $1.8 million through those. We're in fact cash flow positive, if you can believe it. So our project, it's what's referred to as a volcanogenic massive sulfide deposit, or VMS for short, and they're high grade, high margin, low capex type targets. And what that means are the kind of projects that have a small footprint that you can permit, you can finance, and you can mine, and they often have quite long life profitable operations. We're currently in that active resource expansion stage. It's an exciting place to be, where we're growing our resource quite quickly, and we're right on that transition point of starting to look a little harder at the economics of the project. It's truly a district scale opportunity. There's very obvious potential for multiple deposits, and we think that's a unique aspect of our company and why we're such a good investment. We're in a stable, mine-friendly jurisdiction, Southeast Alaska. I mean, Alaska, it always charts at the top of the list for mineral potential and policy. I guess one of its knocks might be its remoteness, and that's not an issue for us at all. We've also got quite an exceptional partnership structure, and that's with a company called DOA Metals and Mining. They're an integrated smelting mining metals company based in Japan, and they've got the option to earn a 49% interest in the project by incurring US $22 million over 4 years. We're currently in the third year of that agreement. We'll spend about $15 million by the end of this year. So where we're situated, right at the top end of the Alaska Panhandle. Neighboring mines include the Kensington Gold Mine, operated by Coeur, and Greens Creek, operated by Hecla. It's a great place to be. VMS deposits occur in belts, and we're in the same belt or same age rocks as Greens Creek, which is one of the world's richest long life VMS deposits, mines. And we're also in the same belt as Windy Craggy, which is one of the world's largest VMS. So if you're going to go looking around the world to find VMS, this is a good place to be, in our opinion. This is a satellite image with our land position draped over top and the shading there. The core property is off to the left with the resource area and the multiple prospects and showings surrounding it. But really what I want to highlight here is the highway axis shown in red. Door to door, we're looking at about 40 miles transport distance from Haines to the port in Haines. Other features here to highlight, I guess, is the active resource extraction in the region. There's active logging, placer mining, and flat ground. Land use management plans have mining as a priority use for this land. So what we've done, we've doubled the amount of drilling on the project since our last resource. And then in May of this year, we updated that resource, and we were able to double the resource. We're extremely happy with that. It's currently sitting at 8.1 million tons of 1.4 copper, 5.25 zinc, 31 grams silver, and 0.32 grams gold. That's all in the inferred category. Our focus has been expand as much as we can, and it's made up in several different zones. And all of those zones are open to expansion. And the important thing to take away here is these grades and the size is consistent with what's been mined historically and currently for VMS deposits within North America. And we used a fairly conservative metal price and NSR cutoff when we calculated this. This is a cross section through the south wall zone part of the deposit. And really what I want you to get out of this slide is the widths and the grades we're seeing. Nice, consistent, wide zones, high grade, and good continuity. It's also a nice steep geometry, which lends itself to lower cost mining. So all the kind of things you want to see. Expanding on that theme of lower cost mining, one of the things the terrain in the area offers us is a real opportunity to access this at a much lower cost. Your upfront development costs to be able to get in laterally to access the ore here is a fraction of what it would be to sink a shaft or ramp down. What that means is lower capex and hopefully a higher NPV to a project, and ultimately lower production costs. So this terrain is a huge advantage for an underground type of operation, which is what this would be if it goes the distance. Also shown on this slide are some of the other prospects in the area. And once you get underground, you're 1,000, 2,000 meters out, lateral development to those, and that's no different than ramping down 200 meters. So it's everything's quite accessible. Scaling out, one of the things that we really like about the project, and we think our partners really like about the project, is that district scale opportunity. And so what I've done here is I've shown or compared the Hokuroku district in Japan against our property position in Alaska. Hokuroku happens to be the district where Dowa's mined for the last 100 years. Collectively, it's produced about 138 million tons in multiple deposits. So it's the nature of the beast with these kind of deposits. If you find one, you often find more. Like Flin Flon and Noranda. And one of the things, we actually control this entire belt. We control all of this camp here. Our land position was increased about 7-fold last year with leasing everything surrounding this quarry area you see. And so we're in that unique opportunity to have a, kind of like a Hud Bay in Flin Flon 100 years ago, or Noranda in the Noranda camp. And we think there's a tremendous opportunity to keep finding more deposits. Just to highlight some of those prospects, looking here, just a cross-section from an area west of our main resource area. These ore zones, they're basically confined to specific stratigraphic horizons. In our case, there's been a lot of folding around. Wherever that horizon pokes its nose out at surface, we're seeing mineralization. So this area, we see really high-grade silver, more akin to Greens Creek type grades. One 200-pound bulk sample on surface ran 12 ounces per ton silver. Most of these haven't been drilled. The one that has, we've got up to 23 meters of 134 grams or 4 ounces silver. And we just haven't had a chance to get to these yet. We've been so focused on expanding our resource, but it's the obvious next go-to areas for us. So I guess summarizing our achievements in the last, say, 4 months or so, we've been really focused on de-risking this project, advancing it, and staging it for success in the future. We've already talked about the resource expansion, doubled the holes, doubled the resource. We're currently, we have a $5 million program this year with 2 drills turning. One is still turning right now, so we're still active up there, focused on expanding. We've done some metallurgical test work. A real key thing in these types of deposits is understanding how easy it's going to be to win the metal out of the rock, passed with flying colors, very clean, high-quality concentrates produced at moderate grind sizes. We got an additional endorsement through the Japanese government. There's a government entity called JOCMEC. They're focused on securing strategic resources for Japan, and they've got a financing agreement with our partners, Dowa. And we've steadily been building up our technical team. We've added Ian Cunningham Dunlop as a senior advisor with a lot of advanced project experience. Henry Bogart, a mining engineer with a tremendous amount of underground mining experience, and Rick Richens, who's permitted a lot of mines in the U.S. He's been added to the team also. And really, so we're at this kind of inflection point where we're focusing on continuing to expand the resource, trying to find new deposits, but now really starting to bear down on what we have and seeing what we can turn this into. And with that includes engineering and environmental work. The last couple of years, we've conducted quite a lot of baseline environmental and geotechnical studies. And we also have a well-established community and stakeholder relations program. We've increased our access. We built a road into the core of the project. And as I alluded to earlier, we acquired a very large package of land that surrounds our core claims. And that's done 2 things for us. One, it's given us the opportunity to explore a regional package. We've been able to, Constantine's maintained 100% of over 90% of that land. So it gives us the opportunity while we're advancing down the permitting path with Dowa on our core asset to be exploring on our 100% land by ourselves. But it also has brought the state, the lease is with a state entity. It's made them a stakeholder in the project, which is great in terms of getting that commitment to the project's future. So in summary, it's an exciting resource building stage. It's a fun place to be. We're having a lot of fun drilling holes and growing this deposit. It's well funded, which sets us apart, I think, in this marketplace. As I say, $22 million over 4 years. We've got another $7 million left to spend. And we think all the ingredients are in place to be a success. Thanks very much.